Friends, fellow explorers of the universe, today we venture into a new cosmos, not of stars and galaxies, but of finance, a realm being reshaped by incredible technology. We are talking about quantum AI trading. What is this, you ask? It sounds like something from a science fiction movie, doesn't it? But it is becoming very real, very fast. It is the marriage of two powerful forces, quantum computing with its almost magical processing power, and artificial intelligence, the ability of machines to learn and think. Together they aim to revolutionize how we trade, how we understand markets, how we make financial decisions. This is a big deal, folks, a really big deal for the world of money. Think about the financial markets. A constant storm of data. Prices flicker up and down. News, good and bad, impacts everything. Human traders, even the best ones, have limits. We can only process so much information. We can only react so quickly. Quantum AI trading promises to shatter these limits. Its main purpose is to analyze vast oceans of data, to find hidden patterns that no human, no ordinary computer could ever spot. It aims to make trading strategies smarter, faster, more accurate than ever before. It's about gaining an edge, a quantum edge, if you will, in a highly competitive world. The goal is simple yet profound: to predict market movements with greater certainty, to manage risks more effectively, to optimize investment portfolios for better returns. Imagine a system that learns from every trade, every market tremor, every whisper of financial news globally, continuously, tirelessly. This isn't just about making more money, though that's a part of it. It's about understanding complex systems. The financial market is one such complex system. It's like trying to predict cosmic weather. But with stakes measured in crores of rupees, dollars, and yen, this technology could redefine financial strategy. So quantum AI trading is not just a fancy term. It represents a fundamental shift, a paradigm change in the financial industry. It's the next step in the evolution of trading, from human intuition and floor trading to algorithmic trading. And now, to this powerful new frontier, we are at the dawn of a new era, an era where the strange rules of the quantum world meet the complex dance of global finance. Fasten your seatbelts. We are about to explore how this incredible fusion works and what it might mean for all of us in the years to come. Let's talk about quantum computing. It's a mind-bender, truly. Your everyday computer, your laptop, your phone, they use bits. These bits are like light switches, either on, 1, or off, 0. Simple, reliable, but quantum computers, they are a different beast altogether. They use something called qubits. Think of a qubit not just as on or off, but potentially on, off, and everything in between, all at the same time. This is called superposition. It's like a coin spinning in the air, its heads and tails simultaneously until it lands. This opens up vast computational spaces. Then there's another quantum trick, entanglement. Imagine two of those spinning coins. Entangled qubits are linked, spookily linked, as Einstein called it. If one lands heads, you instantly know the other is tails, even if they are miles apart. This interconnectedness allows quantum computers to perform many calculations in parallel. Not one after another like classical computers, but all at once. This means they can tackle problems of staggering complexity, problems that would take today's supercomputers billions of years. A quantum computer could potentially solve them in hours, or even minutes. This is a game changer. So how does this relate to trading? Financial markets are incredibly complex. Think about the sheer volume of data: stock prices, trading volumes, economic indicators, news articles, social media sentiment, global events. It's a data deluge. A classical computer struggles to see all the connections. It sifts through data step by step. A quantum computer, with its qubits and entanglement, could see it all. It could analyze a million scenarios at once. It could find subtle correlations, hidden patterns that are invisible to current methods. This is the power we are talking about. This immense processing capability is key. For example, optimizing a large investment portfolio. With hundreds, even thousands of assets, finding the perfect balance of risk and reward. This is a monstrous calculation. Classical computers use approximations. They find good solutions, but not always the best. A quantum computer could explore all possibilities, or at least a vastly larger set of them. It could find the truly optimal portfolio. This isn't just faster, it's fundamentally better. It's like having a cosmic calculator for finance. The potential is simply astounding, no doubt. Now let's bring in artificial intelligence, AI, the brains of this operation. What is AI in the context of trading? It's about creating computer systems, systems that can learn from data, just like humans learn from experience, but much, much faster and on a much larger scale. We are talking about machine learning algorithms. These are sophisticated mathematical tools. They can sift through historical market data, prices, volumes, news, everything. They look for patterns. They learn what typically happens before a price goes up or before it goes down. It's like teaching a computer to be a financial detective. These AI systems are not static. They don't just follow a fixed set of rules. They adapt. They evolve. As new data comes in, the AI updates its understanding. It refines its models. If a pattern that used to work stops working, the AI can learn that too. This ability to learn and adapt is crucial. Financial markets are constantly changing. New factors emerge, old relationships break down, and AI can keep pace with this dynamic environment far better than a human trader relying on old textbooks or even a static computer program. It's about continuous improvement. So the AI's job is to make predictions based on the patterns it has learned. It might predict the direction of a stock price or the volatility of a cryptocurrency or the likelihood of a market correction. These predictions are not crystal ball gazing, they are probabilistic based on data. The AI might say, there's a 70% chance this stock will rise in the next hour. This is incredibly valuable information for a trader. It helps in making informed decisions, reducing guesswork and managing risk. AI is the smart engine driving these decisions. When you combine AI with the power of quantum computing, something special happens. The AI algorithms themselves can become more sophisticated. Quantum machine learning is an emerging field. It promises AI models that can learn even more complex patterns from even larger data sets faster than ever. Imagine an AI that not only learns from market data, but also understands the subtle quantum calculations, the kind that reveal deeper market structures. This synergy is what makes quantum AI trading so exciting. It's AI on quantum steroids, so to speak, a truly powerful combination. So we have quantum computers for massive calculations and AI for smart predictions. But how do these insights turn into actual trades? That's where automated trading systems, or ATS, come in. You might have heard of algorithmic trading or algo trading. ATS is the broader concept. It's about using computer programs to execute trades automatically, without direct human intervention for every single transaction. This has been around for a while, actually. Many big banks and investment firms use it. They have been for years. These automated systems work based on preset rules or increasingly based on AI-driven signals. For example, a simple rule might be if stock X drops by 5% by 100 shares, or if indicator Y crosses threshold Z, sell. The computer monitors the market conditions, non-stop, 24/7 if needed. When the conditions are met, wham, the trade is executed instantly, much faster than any human could click a mouse. This speed is a huge advantage in fast-moving markets. A millisecond can make a big difference in profits or losses. Think about the efficiency. An automated system doesn't get tired. It doesn't get emotional. Fear and greed are powerful human emotions. They can lead to bad trading decisions. An ATS sticks to the plan. It executes flawlessly based on its programming. It can manage multiple trades across different markets simultaneously, a feat impossible for a human. This allows for strategies that exploit tiny price differences or fleeting opportunities that only exist for fractions of a second. This is the power of automation in trading. Now imagine supercharging these automated systems with the insights from quantum AI. The preset rules become incredibly sophisticated, guided by quantum-enhanced AI predictions. The system isn't just reacting to simple price movements, it's acting on deep, complex patterns. Patterns identified by the quantum AI. The execution remains lightning fast, but the decision-making behind it becomes vastly more intelligent. This is what quantum AI trading aims to achieve. A seamless flow from quantum analysis to AI prediction to automated execution. A truly intelligent automated trading machine. Section 5, the Symphony of Systems, how quantum AI trading actually works. All right, let's put all these pieces together. How does a quantum AI trading system actually function? It's like a well-conducted orchestra, each instrument playing its part. First, there's data collection. This is absolutely fundamental. The system needs to gobble up enormous amounts of data. We're talking real-time market prices, historical data going back decades, company financial reports, economic news from around the globe, even sentiment from social media posts or news headlines. The more data, the better the potential insights. Think of it as feeding a very hungry, very smart beast. Next comes data processing and model training. This is where the quantum computer flexes its muscles. It sifts through that colossal mountain of data. Using its qubits, it can explore countless correlations, far more than any classical computer could. Simultaneously, the AI algorithms, potentially quantum-enhanced AI, get to work. They are trained on this processed data. They learn to identify incredibly complex patterns that might predict market behavior. This training phase is crucial. It's where the system builds its intelligence, its ability to forecast, and this is not a one-time thing, it's continuous. Once the AI model is trained and deemed ready, it starts making predictions. This currency pair is likely to go up, that commodity might face a supply shock. These predictions are then fed into the automated trading system. The ATS has strategies programmed into it. These strategies decide what to do based on the AI's predictions and its own risk management parameters. For example, how much capital to allocate to a trade, what are the profit targets, and what are the stop-loss levels to prevent big losses. It's a sophisticated decision matrix. Finally, execution. The automated system places the buy or sell orders directly into the market at lightning speed, and it doesn't stop there. The system constantly monitors the outcomes of its trades. It gathers new market data, and this new information is fed back into the loop. The AI model learns from its successes and failures. It adapts. The quantum computer might rerun complex analyses. It's a continuous cycle of data collection, processing, prediction, execution, and learning. A symphony of high-tech systems working in concert, aiming for that perfect financial note. It's quite the setup, isn't it? Section 6. Unlocking potential applications across diverse financial markets. So where can this powerful quantum AI trading be used? The possibilities are vast, spanning across many different financial markets. Let's start with stock trading. This is a big one. Quantum AI could help in building much better investment portfolios, going beyond simple diversification. It could find the optimal mix of stocks, minimizing risk while maximizing potential returns based on deep analysis of correlations and future probabilities. It could also predict individual stock movements with higher accuracy, identifying undervalued gems or overvalued bubbles. This could change how fund managers operate. Then there's the wild world of cryptocurrency, Bitcoin, Ethereum, and thousands of others. These markets are known for their extreme volatility and for being open 24/7. Humans struggle to keep up. Quantum AI could thrive here. It could analyze the complex dynamics of crypto markets, identify patterns in the blockchain data, and predict price swings. It could even spot arbitrage opportunities, those tiny price differences across different exchanges that vanish in seconds. For crypto traders, this could be a very powerful tool, helping navigate the digital gold rush, or perhaps the digital tulip mania, depending on your view. Forex trading, the foreign exchange market, is another prime candidate. It's the largest financial market in the world. Trillions of dollars are traded daily. Currencies fluctuate due to countless factors: economic policies, geopolitical events, interest rate changes. Quantum AI could sift through all this global information to predict currency movements with greater precision. This would be invaluable for international businesses, for managing currency risk, and for forex traders looking for an edge. Imagine predicting the rupee-dollar exchange rate or euro-yen with a new level of confidence. And let's not forget commodities: oil, gold, agricultural products like wheat or coffee. Their prices are driven by global supply and demand, weather patterns, geopolitical stability. Quantum AI could model these complex interactions to forecast commodity price trends. This could help producers, consumers, and investors to make better decisions. For instance, an airline could better hedge against fuel price hikes. A farmer could get a better sense of future crop prices. The potential applications are truly widespread. Quantum AI trading isn't just for one niche. It could touch almost every corner of the financial universe. Section 7. Navigating the choppy waters, risks and considerations in quantum AI trading. Now, it's not all smooth sailing. This powerful technology comes with significant risks and important considerations. We must talk about these. First, regulatory uncertainty. This is cutting-edge stuff. Quantum AI trading. Regulators around the world are still figuring out basic AI, let alone quantum-enhanced AI. There are few, if any, specific rules for it. How do you ensure fair markets? How do you prevent manipulation? If something goes wrong, who's responsible? The programmer, the company, the AI itself? These are tough questions, and clear regulations will take time to develop. This uncertainty is a big hurdle. Market volatility is another major concern. What if these super smart, super fast systems all react the same way to the same signal? They could amplify market swings, potentially causing flash crashes or creating new kinds of systemic risk. We saw glimpses of this with earlier algorithmic trading. Quantum AI could make these effects much larger, much faster. Imagine a scenario where competing quantum AIs try to outsmart each other. This could lead to an unstable arms race, making markets even more unpredictable for ordinary investors. We need to be very careful here. Then there are the ethical concerns. Who gets access to this technology? Initially, it will be very expensive, likely only available to big financial institutions, large banks, hedge funds. This could widen the gap between the haves and the have-nots in the financial world, creating a two-tiered market. Is that fair? What about job displacement? If AI can trade better than humans, what happens to human traders and portfolio managers? These are serious societal questions. We also need to consider transparency. If a quantum AI makes a decision, can we understand why, or is it a black box? Lack of explainability is a problem. Finally, security risks are paramount. Quantum computers, in theory, could break current encryption methods. This has huge implications for financial data security. And what about the security of the quantum AI models themselves? These models will be incredibly valuable intellectual property. They could be targets for theft or malicious attacks. Imagine a rogue AI or a hacked quantum trading system. The potential for financial chaos is significant. We need robust security measures and a deep understanding of these new vulnerabilities before we unleash this power fully. There's much to consider indeed. Section 8. Early Explorers, Real-World Forays into Quantum Finance. While full-blown quantum AI trading is still on the horizon, the journey has begun. Pioneers are already exploring this new territory. Big financial institutions are investing. Tech companies are pushing the boundaries of quantum, hardware, and software. It's an exciting time of research and development. We are seeing early examples, companies trying to apply quantum principles or advanced AI that hints at what's to come. Let's look at a couple of illustrative names, though the landscape is evolving rapidly and many projects are kept under wraps for competitive reasons, you understand. Consider a hypothetical firm, let's call it High Flyer Quant. This firm might be focusing on quantum-inspired algorithms. These are algorithms that run on classical computers, but they mimic some of the logic of quantum computation. They might use these for complex portfolio optimization problems or for advanced risk analysis, trying to find those subtle correlations in market data that traditional methods miss. They would be heavily investing in PhDs, physicists, mathematicians, computer scientists, all working together to build the next generation of trading models, collaborating with universities and quantum hardware providers. Then imagine another entity, perhaps Beyond Quant. This, again, illustrative group might be focused more on the AI side, developing extremely sophisticated machine learning models for predictive analytics. They might be using vast alternative data sets like satellite imagery to track oil tankers, social media sentiment analysis on a global scale. They would be pushing the limits of current AI while keeping a very close eye on quantum developments, ready to integrate quantum capabilities as soon as they become practical. Their goal to build AI that truly understands market dynamics and can adapt in real time. These examples, though perhaps not specific company names you'll find today doing full quantum AI trading, represent the trend. Major banks like JP Morgan Chase, Goldman Sachs, they have dedicated quantum research teams. Tech giants like Google, IBM, Microsoft, they are building the quantum computers themselves and partnering with financial firms. Startups are also emerging, focused on specific niches within quantum finance. It's a global effort, from New York to London, from Tokyo to Mumbai. The race is on to harness this quantum power for the financial markets of tomorrow. The first true quantum AI trading systems are still being built, but the groundwork is well underway. Section 9, gazing into the crystal ball, the future of quantum AI trading. So what does the future hold for quantum AI trading? It's a bit like looking at a distant galaxy. We see immense potential, bright possibilities, but also cosmic uncertainties and perhaps some unknown dangers. The advantages are clear. The ability to process unprecedented amounts of data, to uncover hidden market patterns, to make faster, more accurate predictions, to optimize investments and manage risk with incredible sophistication. This could lead to more efficient markets, better allocation of capital, and potentially new financial products and services. The promise is truly transformative. However, the risks we discussed are very real. Regulatory challenges need to be addressed proactively. We need global cooperation on this. Market stability mechanisms must be rethought to account for these powerful new players. Ethical guidelines are essential to ensure fairness, transparency, and accountability. We must guard against creating a financial system that benefits only a select few or becomes too complex and fragile. The development of quantum AI trading needs to be guided by a strong sense of responsibility and a commitment to the greater good, not just profit at any cost. The journey towards widespread quantum AI trading will be gradual. Quantum computers are still in their early stages. They are expensive, complex, and prone to errors. Building robust quantum algorithms for finance is a massive challenge. Integrating them with AI and automated systems is another hurdle. It will take time, years, perhaps even a decade or more before we see this technology become mainstream. But progress is accelerating. Each breakthrough in quantum hardware, each innovation in AI brings us closer. It's an evolution, not an overnight revolution. At the end of the day, quantum AI trading represents a powerful new tool. Like any tool, it can be used for good or for ill. The key will be how we develop it, how we regulate it, and how we integrate it into our financial ecosystem. A balanced perspective is crucial. We should be excited by the possibilities, but also mindful of the challenges. The future of finance could indeed be quantum, but it's up to us to shape that future responsibly, thoughtfully, with a clear vision for a financial world that is not only more efficient, but also more equitable and stable. The universe of finance is expanding. Let's explore it wisely.